Hello guys, welcome to today's market analysis. So we actually opened a bit gap down and then we went up and exactly where we faced yesterday's selling pressure. You see this area, right? This is where yesterday there was a lot of selling pressure. At the same level, there was even selling pressure today and in fact closed lower, right? So this is how the 15-minute chart looks. And my view will turn, my view today is pretty bearish given other indicators, but I would say go for aggressive bearish position if it crosses this particular line because it's a important support where 1, 2, 3, like in the 15-minute, in the smaller time frame, the support has been held multiple times. So if it breaks this, then you can grow aggressively. Now, if you look at what has happened in the daily candle, like we said yesterday, I was not fully bullish, right? Because we saw that the wick yesterday, the upper wick was greater than the lower wick, which suggested that there are a lot of bears present, and that's causing trouble to us. So if we see today's candle, it's also the same, right? So there, it's a doji indecision, and there are a lot of the upper wick is greater, right? So that definitely says there is a lot of bearishness present in the market. So chart wise, I feel this particular level, the remark yesterday holds good. Mostly expiry is supposed to have between these two levels that we marked 2-3 days ago, right? Now coming to open interest and what happened today. So today, if you see, there is a lot of call writing above 18,300. So Nifty crossing 18,300 is highly unlikely. Now, why am I saying this here? If there's only call addition, okay. Now there's call addition as well as put unwinding, right? So not only have new players come in, even the existing players were like, okay, I'm wrong. So I'm going to exit my bullish positions are around 18,300, 18,400 and all of those. So yeah, a lot of call writing today. And man, the option chain compared to yesterday looks bearish. Like yesterday, I think we had a PCR of 1.12 or something. And today, if you see, it is, a lot of calls have been added, like I told. So 18,300, 450, 18,450 is unlikely to cross. Why am I saying with a higher conviction? I'll let you know in some while. And yeah, so coming back to the next thing, which is what the big guys have done. The big guys have turned bearish today. So they've reduced their calls, right? They have sold calls and they have bought puts, which both indicate bearishness. So the thing is, the main thing that we need to see in this red and green chart is the gap between the red and the green. Okay. So if you compare yesterday to today, the gap has increased, right? So FIDIs are bearish for tomorrow, and this is supported even in the future shots. They have created some 500 crore or future shots. Now you may argue saying they have bought both FI and DI have bought stocks. So the thing is, stocks and buying stocks is usually less of importance of a data point in the weekly expiry, right? If you're looking like long term or medium term we're confirmed bullish. Okay, the charts say we're bullish. FIs are continuously buying. They've been pumping thousands of crores since the start of this month. So medium term is surely bullish. But for tomorrow, I think we might take a bearish stance, right? And they have, actually it was 0.02K, now it's back to the minus territory. So FIs are looking pretty bearish, right? Now the next data point is what the global markets are doing. So the global markets are bleeding, guys. Now look at this. DAX is down 2%. The Chinese markets are down 2%. All the US markets are down like 1%. So in summary, chart says we are bearish. Open interest says we are bearish. FII DIA data says we are bearish. The global markets indicate bearishness. So here's the thing. Now, as I said, I'm not a big fan of adjustments or over trading and all these things. I'm happy if I get my 1% a week. So I'm not going to take any new trades, right? But since there is overwhelming bearishness, I'm going to take a virtual trade. Virtual trade is where there's no, you're not putting your own money, you're just stimulating it in a virtual environment. So I've taken a bar put spread for tomorrow because, man, everything is signaling bearishness, okay? And the break even is just like 0.1%. So just as an experiment that all of us do, let us just, it's a virtual position. I've not made any change to my position. So I'm just going to see how it goes tomorrow, right? Because everyone is signaling bearishness, man. Okay. Yeah, so virtual position, let's see how we go tomorrow. And coming to my positions are still the same. The 17,900, my break even is minus 2% away, right? And Nifty falling 2% a day is like highly unlikely and all of that. But given that, even if it falls like 1.5%, I'll still make my entire max profit tomorrow because my break even is far away. So a reminder, I'm not any SEBI registered analyst. So this is only for education purposes. So keep your capital safe, follow risk management, and yeah, thank you guys.